Metair Investments manufactures and supplies motor vehicle components for the OEM or original equipment market.
Impressive. Well done. And the aftermarket as well. Now, that's not just here in South Africa where they have tie-ups with all of the local players. Remember, there's that local content rule here in South Africa where you have to use stuff from here. So they make seat belts and lights and that kind of thing. Also a big business in Eastern Europe where they make batteries for driverless stop-on, stop-off cars. And Turkey. Now, Turkey was a big move for them. Remember, we owned this one in our portfolio.
We
We'll
did.
talk about
Market
that
cap here, 5.8 billion rand. PE ratio 10. Dividend yield of 2.7. Paul, you say we owned them. We also got rid of them.
Look, we thought that they were going to incorporate the business in Turkey, which is called Mutlu Akku, and that it will all go well. But unfortunately, the last set of results were disappointing, and we decided we could do better elsewhere. I will just point out they've gone lower since we sold them, and right of the middle at the moment, a lot of political uncertainty in Turkey.
Would you pick them up, considering that they have sold off quite considerably?
Yeah, I mean, again, yeah, Paul's right. I think it was a good exit that you guys made. Again, there are issues in Turkey. I mean, they were looking at a strike. They've also then allowed their inventories to increase quite dramatically because they were expecting a strike. That's also impacted their working capital. So it's, the question you're asking, I suppose, is the sell-off pricing in all the bad news? I mean, at a P of 10, though, it's not particularly expensive. It's got a decent dividend yield as well. I think there is a margin of safety in it, but is it?
Well, let's look at the share price graph here, Paul. Where did we get out?
We got back out on that slide, but not all of the slide, on the tail end of that chart. But it was not just the Turkish thing and all that was a problem with the recent results. It was also they said that they were going to have to incur quite big capital expenses in order to retool some of their manufacturing procedures for the local market. Because remember, they sell things like, headlights to Toyota and to BMW. So if there's a change of model from the 3 Series to the 5 Series or some different version of the then they have to redo, and that can get costly.
So too much uncertainty around the stock going forward. Not necessarily all the bad news already priced into what we've seen.
No, I don't know. I think it's always difficult to tell if all the bad news is priced in. I mean, I think, on a P of 9 their growth rates are not, exceptional, but they do present, a fairly good rand hedge for guys as well, with the offshore operations. I don't think it's a bad company. I don't think you should slam it. And I don't think it's very expensive either. So, this would probably be a more sensible investment for people, things that I would add to a portfolio at this stage. Obviously, but not with that hype and story around it. But valuation looking, I think, fairly attractive. Yeah.
Let's call it hot or not.
I'm going to go with not hot. I mean, look, it was obviously a good enough company to be considered for our portfolio in the first place. So that's a mark of confidence. But at the moment, it just feels like there isn't quite the traction. And I think the Turkish assets are going to create a little bit of additional valuation.
I'm also going to go not hot. It's sort of a hold. Yeah, it's not exciting enough to call hot.